Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is December the 3rd. And at current, it is 4:51 in the a.m. Eastern Standard Time. Let's take a look at the charts of the pre-market activity of the indexes here in the United States. Then we're going to segue over and into members' stock chart requests, which is where I review the symbols that our gold members submit for me to review. But to set the stage for the morning's pre-market activity, we need to talk about the G-20 summit. And the big takeaway from that meeting was that the United States and the Chinese came to a détente, a ceasefire in the trade war. An agreement was that there would be no additional tariffs through to the new year. And as I mentioned to members on the week ahead commentary, which is posted on the members area on the website, I said expect a market rally, expect the dollar to weaken, expect gold to rally. And we're going to go over all those charts in a moment because that's exactly what is playing out. Let's kick things off with the S&P futures. You can see that we are current up 1.83%. We have taken out last week's highs, which is very bullish, and we are close to taking out or retesting the highs of November the 17th. We're not quite there yet. Now, while this is a very bullish morning for the S&P futures, you need to keep one thing in mind, actually two. One, on this 4-hour chart, these will all be 4-hour charts. We are, let's zoom in here, we are trading above the third standard deviation Bollinger Band, and we're already beginning to see topping tails. RSI is at 84.78. Folks, in short, if you're not familiar with technical analysis, we're not supposed to be here. So while I'm predicting that we're going to open up strong, I'm also predicting that we are going to get an intraday pullback at some point in time to alleviate this overbought condition. So what are we doing this morning? Will we be chasing stocks? No, we already bought stocks last week. I'll be looking to book some profits. And then we'll look to get back in on any pullback. The reason is that I believe that we are setting up for a rally into the new year. What happens after the new year? The markets will tell us. We'll position ourselves defensively for the new year. But seasonality, this time of year, has historically favored bulls. So I'm not going to fight it by going net short the market as of yet anyway. Let's take a look at the NASDAQ. We have also taken out the highs of last week. We are up at current 2.58% on the morning. We are trading above, as we are with the S&P 500, above the third standard deviation Bollinger Band with RSI at 82.94. So to expect that this rally is just going to continue throughout the day, it doesn't make sense. It's pie in the sky. We're going to get a pullback at some point in time, which is fine. It's the pause that refreshes. I'm not saying that we're going to give up all the gains of the morning. I'm not saying that we're going to crash here. This is not doom and gloom. All I'm saying is that the prudent thing to do is to not go chasing stocks at the open. The time to purchase stocks, let's pull back, was back here when we began to break out of this 4-hour wedge formation. You had another opportunity here as we consolidated for a couple of days last week within this flag formation, and then we broke out on Friday, and here we are this morning. So please, folks, don't go chasing this market this morning. Let's take a look at the U.S. dollar and how it behaved. I mentioned yesterday on Swing Trading Today that I predicted that we would see dollar weakness because the news, let's clean this up. Okay, this is better. The news when we get bullish news coming out with regard to a resolution or a possible resolution to the trade war with China has caused the dollar to sell off. And when we get negative news regarding the trade wars, well, then you see a risk-off reaction by the markets and a flight to perceived safety into the U.S. dollar. So this morning, with the positive news out of the G-20 summit, you're seeing the dollar sell off as expected, and we are seeing now lower highs on this 4-hour chart. We are probing the lower band of support as well. We're beginning to bounce back here a bit, as one might expect. a defense of this lower band of support. But it's not looking good shorter term for the US dollar. Now, on a weekly basis, the weekly chart looks really good last week for a continuation setup. But as it stands this morning, we're seeing dollar weakness. It's a risk-off morning. So what do we want to look at, which hasn't necessarily rallied in recent months, but has been spared the sell-off in recent days by the market? And we want to take a look at commodities because a weak dollar favors commodities, in particular gold. Gold is ripping this morning. We're up over 0.75 of a percentage point, but as with the stock market, we are leaning into the third standard deviation Bollinger Band. In short, we're not supposed to be there. We'll pull back, we'll consolidate. I believe, though, if the dollar pulls back, breaks support, gold will continue higher. Silver, this morning silver is rallying as well. Now, silver is up 1.89% on the morning, but it isn't as extended as gold is. But we are nearing resistance, so just be forewarned, we have resistance above. But net, a very strong morning for gold, silver. Let's take a peek at oil, which has been under a lot of pressure of late. Oil is bouncing back. We did clear resistance on this 4-hour chart. So we have higher lows that have been put in. We have broken out. We're beginning to take out prior highs on a 4-hour basis. We're pulling back off of this overbought condition relative to the third standard deviation Bollinger Band. And that's a good thing. So we're already beginning to see a pullback on oil, which is at current up nearly 4% on the morning. Natural gas, not much happening here on natural gas. We are down in the morning, but we've had a heck of a run here. And we are consolidating these gains. We've attempted to break out above this upper band of resistance, but failed. We're simply consolidating here. Since the United States is such a big producer of natural gas, you're not going to get the dollar sell-off bump on natural gas as you might get with gold or oil. So I wouldn't expect that type of wind at the back for natural gas. But net, the trend is up. So members, more to come this evening on Market Wrap. Let's segue now over and into, hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this. I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right. Trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait. Enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. Let's segue now over and into gold members stock chart request. The first chart up, Apple. Now, 2 weeks ago, we broke down below critical support at the 179 level. Last week, we attempted to bounce back. We did trade above 180, but we failed to recapture support. Now, we did hit a low last week of 170 on Apple, and that marked a resistance level from back here in April of this year. So we may be building a base at the 170 level, and we closed at 178.58, up over 3.5% on the week last week. Volume was very good. Daily chart. But before I go to the daily chart, remember, we have resistance above at the 179 level to 180 level. Daily chart. Now, for any stock, especially one that is in a downtrend, and have no doubt, Apple is in a downtrend, despite the fact that it closed up last week. So from my perspective, any trade that's put on should be viewed as a short-term swing trade and not a longer-term investment, because there's been a lot of technical damage done, and the weekly charts have not yet validated that we have seen a bottom on Apple. Okay, so what we need here is for Apple to consolidate within this formation, this wedge formation. And we need to see a breakout above this upper band of resistance in blue dotted line. And more importantly, we need to close there. It doesn't matter where a stock trades intraday. What matters is where it closes. You can see this 177.50 level is acting as pretty good support. We have a nice double bottom setup on Stokes, and they are rising, which is bullish. Volume, which rolled in about average on Friday, is beginning to decline some. You want to see those down volume bars drop off if we close down on the day. But I believe that we are going to get a rally in Apple in the next couple of trading days. In all probability, we're popping up higher this morning. The question is, do we hold those gains? And that goes for any chart I'm going to go over right now. If we close at or near the highs of the day, well then, in all probability, you're going to see a continuation rally this week. Now, if we see a sell-off and a reversal day on the markets or on Apple, whatever stock we're talking about, well then, that's a pretty bearish event. So again, let's allow for the markets to do their thing. Remember on the 4-hour charts, we are overbought already on the morning. Let's allow the froth to come off this market. Let's allow for us to watch and see how the market is prepared to close the day. And again, I'll repeat, do we close at or near the highs of the day, or do we sell off? That will set the tone for the entire week. Nvidia, weekly chart. Another stock where there's been a lot of technical damage done, but we bounced back last week. It was a very bullish week in that we did not put in a new weekly low, but we did put in a new weekly high. We have a double bottom setup forming on Stokes, which is bullish. Volume was very good. Now, for a longer term investment, I would look to get involved with Nvidia on a rally up and through this upper band of resistance on a weekly basis. And more importantly, a close there. We're not there yet. We're not talking investment. All we're doing is talking short-term trade, daily chart. Now, on a daily basis, RSI has broken out. Stokes are rising, but is still down below the neutral line at 50. We have seen a nice rally here, so this is taking the froth off of this oversold condition on Nvidia. I would anticipate a pop higher this morning. Would I chase the rally? No, I would not. I'm looking for a pullback and a higher low. Perhaps not even necessarily all the way back down to a 130 handle, but a higher low nonetheless, and in all probability, a breaking of this lower band of support, which has acted as good support since the November lows. Friday was a very bullish day in that we saw a bullish key reversal, meaning they attempted to take it down on Friday. They failed, and it was reversed to close at the highs of the day. So Nvidia is looking strong, but we will pop higher this morning in all probability. And we will also, in all probability, get a sell-off. The question is, do we close strong or do we close weak? Volume on Friday was very good. Amazon, weekly chart, very close to a breakout on a weekly basis. Volume, very strong last week. Daily chart. So here's where it gets concerning. I'm concerned about the fact that Amazon closed just shy of its 200-day moving average. In fact, we tapped it on Friday and then we sold off slightly. Now, we do have the 50-day moving average, which is declining. That is going to act as a natural ceiling, just like the 200-day moving average did on Friday. Now, we, in all probability, are going to get the negative crossover of the 50-day crossing below the 200-day moving average. That's going to put some pressure on the shares. But I believe that on any pullback that we get on Amazon, it'll be an opportunity to buy the shares in anticipation of a Santa Claus rally into the new year. After the first of the year, what will 2019 bring? I'm not sure yet. We need to see how we close out the month of December. And then on my 2019, the year ahead forecast, we'll make a determination of as to where we believe the markets are going, what sectors will outperform, which ones will probably underperform. So to close out here, Amazon, I think, is probably going to pop today. It will pull back. Watch out for the negative crossover of the moving averages, but that will be your opportunity to build on a higher low from recent lows. But as it stands right now, we continue to put in lower highs and lower lows on Amazon, which is bearish. So no need to get all excited about the pop higher this morning. Allow it to come to you. NIO, Inc. Not sure what they do. I've never heard of this stock before. We are in a bull flag setup here. We're forming a nice base, not a ton of data. So all we're going to do is go over the daily chart here. We have a bull flag setup forming. I wouldn't be a buyer of these shares until such time that we break out and close above 8.35. Why? It's because 8.35 marks the pivot point of this W formation. Here's the left side of your W, the center, the pivot point of your W, right side building, and now we are preparing to take out the pivot point. Now on Friday, we flashed a bearish key reversal bar. Volume dropped off a bit to the downside, which is bullish. I wouldn't be a buyer of these shares until we get a breakout here, folks. But net, I think that we're moving higher on NIL. There's not a lot of data here to rely upon. So this is a clear show me stock, meaning it's got to show us that it has the ability to break out and above these resistance levels. Resistance level number 1 at 8.15, number 2 at 8.21, and then the Pimp Mac Daddy of all resistance levels right now anyway is at 8.35. Let it come to you. Let's leave off with Tesla. Weekly chart. This is the only chart that you really need. We had a very bullish week last week. We reversed to close up on the week 7.57%. When would I buy Tesla? I wouldn't buy it until we break out of this trading range, which we've been in since early 2017. Now, we broke it earlier in the year on some really horrific news regarding Elon Musk, but that wasn't enough to take the shares down despite all the doom and gloomers out there. The shares have bounced back, and when I see a stock rally on horrible news, that tells me that in all probability, we're going to break out here in 2019. So I wouldn't be a buyer of the shares until we break out and close above this upper band of resistance between 360 and 370 per share. I would scratch the edge, put a trade on with a stop right below this lower band of what should be then support. Right now it's acting as resistance right here. And then I would be an aggressive buyer as we began to take out all-time highs. Yes, I want to buy high and sell higher. And that's it for this morning, folks. Everybody have a profitable trading day. Please subscribe to my channel. Members, I'll talk to you later on today. Be well.